Hi there folks, welcome to the EdgebyRS Academy. I hope all of you are doing well and had a fantastic trading week. It's been a while since I've done a public YouTube recording, but given the interest seen on Twitter around my journals, I decided to spare some time this weekend and share with you some insights on how I prepare every single session, how I think, and how I dissect the information that is available to us real-time, MGI, market-generated information, and hope that by the end of this recording, there will be something insightful, something educational that you would have taken away. Of course, what I recommend everyone is you want to have a notepad with you, because when you write these notes, it helps you build your muscle memory. Again, each to their own, but this is what I usually recommend all my members. And to help you develop this approach, to help you understand my approach, I have picked the session of May 1st, which is when we had the FOMC, and I will also talk about the trades that I personally took. So that way, this recording is all about how we acted rather than something hindsight. So this is a quick chart here with a few annotations. I'll walk you through everything. Now, don't get into reading this. Let's go back to May 1st, ahead of the open. Every single day, I always ask myself, what sort of clues did the market leave behind for me? Right? MGI aside, it is what sort of clues that are available to me. So the first thing is, what we recognize is that ES was opening on a gap down. Gap down in theory is, let's say, bearish for the interim because it's opening on a gap down. Sellers are in control of sorts. Now, gap down, which means you want to bring in the gap rules. It was also opening below the spike bottom, which means we also have the spike rules in place. Third, if you are a regular reader of my weekly plan on Substack, then you must be familiar with this anchor balance 5052, 5124. And that brings in the balance rules. So just think about it. Before you're starting the session, you have 3 well-defined rules to guide your session. Now, we can't let all these rules confuse us. So what I typically do is I give priority to the gap rules and then balance rules to understand the structure better. For me, the anchor balance is everything, but when there is a gap, then that also takes in priority. Now, this was what we knew ahead of the session. Second, what sort of character could we have expected on May 1st? Very simple. Markets are awaiting information, right? FOMC, some other day it could be CPI, some other day could be NFP, could be earnings, could be anything, right? When markets are awaiting information, they tend to chop. That is what we know. And if they tend to chop, you exactly know what sort of behavior to anticipate. Now, for me, chop is often anywhere between 10 to 25 points is chop, which means I exactly know that if I can pick the right location, I can secure good 10 points. And when I anticipate chop, I don't want to engage in the middle. I want the edges. So, this is what we knew ahead of the session. One more important clue we had ahead of the session for which you had to go a bit left. And that takes us to Monday the 22nd. Why was this session important? Because it was a double distribution day. It was a double distribution profile. Why is this double distribution important? Because think about it. If I'm just going to draw from these single prints here and the bottom of the upper distribution and I pull it to my right, you will observe how we lacked traction below this zone for a long period of time on the 25th and continued higher. Now, just that it reflects how important the double distribution is from Monday, the 22nd of April. And what I do is I just drag the same zone to my right. And what does it lands to? Right around the chop zone that I identified before the open, right? So of course, any time that you see here is London time, BST. So 5 minutes before the open, I go like expecting chop between 40 and 60s given the references there. So there were multiple references we had. Like I said, it was a spike down, gap down. We had the London low, which is the European low right there. And we had my balance, we had the spike. So all of this put together, I drew up a chop zone, which is, now I know the behavior, which is we are waiting for FOMC, which means we're going to chop. And now I have also identified exactly where to anticipate that chop, which means the more we are at the bottom end of the chop, I want to look for longs. And as soon as we get to the top end, I can look for shorts. Again, each to their own. For me, it was long, and I took that long during London hours itself, which is Globex, where most US folks would likely be sleeping. So, very clear, weakness has continued, but you can either look to go long on the reclaim of 50.44, which is the prior upper distribution that I just showed you, or bottom fish. Since I am active, I'm doing that. Of course, at the time of the message, the price was trading at around 5,042, which is where I personally engaged. Again, like I said, definitely not a condition to short after the liquidation break seen late day yesterday, plus into London. For me, personally, any short is a game for RTH, as that gets proven by gap rules. So, I'm very clear, I'm looking for longs. I don't want to short the whole. This is not the time to short, and I want to look for longs. So we were long at 5,042. Next, so at the open we had our scalps. Let's put that aside. But what's important to note is, despite, now this is the clue you want to assess, right? Gather. Despite being a gap down, sellers did not find traction. If there was a gap and go, we should have pressed. Instead, we kept chopping around. So at that point you realize, okay, this is the real chop in motion and I must not tinker too much. So a lot of traders ask me, RS, how do you know when not to trade? Periods like these, I know what is ahead of me, I understand the character, I have identified where that character might play out, and now I am in pause myself. Now there you go, right? I called out a live long right upon the release of the FOMC at 50.56. First target, gap fill. How was I able to take that call? Again, for your journals right there. We go back, the upper distribution from Monday. Now, this is your homework. Well, if I wanted, I could have really walked you through a lot of examples, but then, if you are keen, I expect you guys to put in some hard work. Go back to the past FOMCs. Go back to the past events that have been there. You will realize often we have a double distribution or a triple distribution to guide us. And that's the exact same thing. We were holding, and this is what message I sent my team 15 minutes before the release, structural points, ES holding the prior upper distribution, balance low, seller zone holding. We are still above the zone, which means seller validation is not present. Had we been below it, it's a sell the news for me 8 out of 10 times. The fact we are above all of this tells me this is going to rocket first. Again, 8 on 10, nothing in trading is 10 on 10. That is a recognition that is important. And right there, I called out a live long, keeping structure in mind, right? The upper distribution and the balance low. Go back to the prior FOMC when ES was trading around 52.30, 52.40s, and again you will realize we had a double distribution then. We were holding the upper distribution. We had a P-shaped profile as well, a nuanced P, I would say, and we were holding the top of that as well. And what do we know about P-shaped? Squeezes. So we had three sets of confluence back then for longs, and come today the same pattern was on repeat. That is the upper distribution from Monday the 22nd holding and the balance low holding, and there you go, we had our first long. So guys, for your journals again, ahead of the event or generally, right, when you're trading, this is how you want to think. Are we at an expensive price point within the structure, or are we at a bargain level? In this case, we were at the bottom of the balance. Had we been at the top of the balance, a different story probably. But now we were at the bottom of the balance. What does it tell you? Cheap. We were holding the upper distribution. What does it tell you? Bullish. Done. All we know is there is a high likelihood of longs paying you, and exactly what happened. Now, there were two reasons that longs even held merit. Because we had an unfilled gap, so that's your first target. We also had the value gap, which is we had the value area low from Tuesday at 5087. So now you have magnets, and the uppermost magnet being the single prints again from Tuesday. So we had three sets of magnets. We are at the bottom of the curve, if you may want to. So by default, long was the trade, and that's precisely why I called the long. Similarly, we rotated from one end of the balance to the other end of the balance. Awareness, guys, awareness. Number two, what I know about a behavior. The behavior is that markets tend to retrace any event move. We all know that, right? We've been there, we've done that, we know it. But the challenge is always location. Think about it. We are top of the balance, bring in balance rules. Clear defined risk. Number two, we've got singles there, cleaned up the structure, we are done with it, which means all we are watching for is a good looking rejection, something we see on 30 minutes. If I take you down on 15, even more cleaner, even more better, easy to execute, using those singles to guide you if you weren't able to pick right at the top of the balance, which is fair because we always look for some sort of response of these levels. So that's your short. What's your first target, guys? Very simple. A retrace. Down to where? It could be the first target is down back to the value area low, 5087. Then comes in the 30-minute bar release high. That's your second target. And your third target, which markets had told you literally before the event, is by leaving this poor low down here. What do we know about poor lows? At some point we want to see an excess. As simple as that. So if you know that this is going to be an excess, we've rocketed at first, which means at some point we will retrace. It could be the same session, could be 3-4 sessions down the road. But you know where the magnet is, and you exactly know you're watching or observing for a failure of a key level to join. In this case, you had the FOMC, you had the anchor balance stop. So right there, for this session, we had gap rules applied successfully. We had the anchor balance, which means we had the balance rules also applied successfully. All we took were longs at 42, and then at 56. Not suggesting we definitely did short twice during intraday, but again, like I said, edges, and you will continue to do well in choppy conditions. Now, next comes in the trades that we took. So right here, I personally shorted at 5114. I waited a bit, got below those singles, and that is when I initiated my trade. Similarly, at 42 and 56, I had my trades. So we initiated those trades live. I called them out live. I explained it as well on Discord, and again, this is how I formed this story essentially of bringing in prior available information, understanding what is in motion today, as in May 1st, brought all of this together and built clarity. So to summarize, guys, when you start your session, A, you want to note all these things down. Like I said, it helps with your muscle memory. So first things, you want to ask yourself, what clues are available to me before I enter the session, before the session gets started? Number two, what are the magnets? What are levels that markets want to revisit? Is it a gap down? Is it a poor high, poor low? Are there singles? Is there a virgin point of control? You want to ask these questions. Once you know where the magnets are, then comes the point, where's the location? Where do I want to enter from? Always remember, when you are trading, each to their own, of course. I know there are traders who can engage at different levels and scalp those 5 points. Again, I'm not that kind of a trader. I personally look for extreme edges where I can swing for 30, 40, 50 ES points because I'm predominantly a swing trader. So again, we want to look for extremes, and once we look for extremes, then we can engage based on the magnets that we can see, right? Some folks even look at liquidity. So again, look for magnets that you can target. Now observe. So this is something on NFP Friday, again, sorry, on Thursday. I took the day off because I did really well. I was holding my runners, long runners, so nothing for me to execute. But look what happens on Thursday. We flush back down, clean up the poor low, leave an excess, holding the chop zone, balance holds on 30 minutes. If I go on 15 minutes, it's the same thing, it's holding, and there you know, we even completed the entire retrace of the FOMC move, cleaned the structure, and there you go, a gradual grind higher then ensued. So it's very, very important, guys, you understand these patterns. Go back to the prior FOMC, and trust me, you can apply all these teachings of today into that session and you will be like, wow. And that is how it works every single session, irrespective of events. I hope this 17-minute long recording was helpful, was educational. I would highly appreciate your feedback, because what that will do is, next time I have something, I will definitely take that slight bit of effort to share with you guys on a weekend. And before I leave, of course, if you guys want to join my Discord, or if you're interested in similar recordings, all you have to do is subscribe on Substack and you will get access to my Academy recordings, which I do every weekend without fail for every single day of the week. And if you want to join Discord, then all you have to do is visit my website on 108altitude.com and go ahead with that. So with that, all you guys have a good weekend, and I will see you next week without fail. Make sure on a Sunday you are reading my weekly plan, which is free, because it will prepare you for the week ahead. Take care and have a good weekend. Bye-bye.